What's up, guys? Welcome back to another episode of Behind the Facade. I am your host, Gavin J. Gallagher, and on this podcast, I explore the mental and emotional game often playing out subconsciously both in your mind and the mind of everyone else in the real estate or property investment market. The key to success in this game is to master your mindset and behavior, to take control of your thoughts, your emotions, and most importantly, your ego. Welcome to the show. Guys, real quick, if you are serious about scaling your property investments, then you need to check out my Elite Property Accelerator. Whether you're stuck on raising capital, structuring deals, or finding the right opportunities, this is the blueprint you need to take your portfolio and your finances to the next level. No fluff, no bullshit, just real world strategies that work and have been tried and tested. So hit the learn more link in the show notes below and I shall see you inside. What's up, guys? Welcome back to another episode, and boy do I feel chilled and relaxed after a lovely family holiday in Tenerife. I was delighted to see that last week's episode went out without a hitch. There was no tech gremlins holding back the episode. And that particular episode covered tenacity as a trait that I do think is very important to embody as an investor or a business owner or entrepreneur, because there's always stuff that can go wrong. And in that particular episode, I used the story of my travel disruption on the trip to Rome that I took recently, just as an example of how plans can go off course and that you have to kind of dig deep to find the strength to keep going when it comes, and that is tenacity essentially. And the whole kind of moral of the story, I guess, was really that this journey is never going to be straightforward. It's never going to be exactly according to plan, and so you have to be ready and you have to be tenacious. Now, another crucial trait that I believe is really important as an investor is resilience. Now, resilience is slightly different to the whole tenacity thing. Tenacity is about keeping going. Resilience is about how you respond. And funny enough, I have a story to tell you. And it's another story from my recent travels. And it's not the trip to Rome. This is actually from my trip to Tenerife. And it's just going to give you an example of where resilience is really important. And so I'll just give you a little bit of backstory. Like, I booked this holiday in Tenerife. We got the kids' academic calendar, and we knew that there was going to be a midterm break right in the middle of February. And so we knew from last year, first of all, the kids are bouncing off the walls during the midterm break, because usually, certainly here in Dublin, in Ireland, as most of you who are listening based here will know, the weather is crap usually around this time of the year. It's the middle of the winter, and so you can pretty much expect poor weather. And so the kids can't really go out and play, and so they're bouncing off the walls. On top of that, you've got the dark. It's getting a little brighter now in the mornings and the evenings, which is nice, but it is darker. And you also have illness, people are coming in and getting sick and things like that. So last year, we decided, no, not doing that again. Let's make sure that we're away for 2025. So we booked this holiday. I think we booked it back in November or December, something like that. So boarded the flight last, at this stage, it's now going back. We were on the flight on the 13th, I think it was. And so it was the day before Valentine's Day. And we got to the airport, checked in, everything was all good. No passport mistakes this time around. Jumped on board the flight, and it's a 4.5 hour flight to Tenerife. Incidentally, I want to do a very quick shout out to the first officer on our flight, and he knows who he is. I'm not going to name him, but he reached out on Instagram afterwards, because I put an Instagram story up, and I just photographed that I was on a plane, and I said, can anyone guess where we're going? And he responded saying, I know it's Tenerife because I just flew the plane down with you on it. And he said, I saw you in the cafe beforehand. And I didn't want to say anything, but, listen to the podcast, blah, blah, blah. So when I heard that, I was just like, wow, it's amazing. You never know when you're being watched. But incidentally, that contest that I did, The winner of that contest is going to get free access to my new property starter kit. And I'm going to tell you a little bit more about that shortly. So we land in Tenerife, we go to the hire car place and we hire a car and drive to the hotel. And so timing wise, it's probably around 7 p.m. as we pull up to the hotel. Walk in, unload the bags into the lobby, and we're standing there in the lobby waiting for our turn, and the guy's like, hello, handed over the passports, and he's looking through it and he's like, what's the booking name? And I explain, and he's like, there is no booking here under that name. And I'm like, excuse me, what do you mean? Like, and I'm just reaching over to my phone, and I use booking.com. They have an app on the phone there, and the app, usually on the front page of the app, is your current next booking. And so opened it up and said, look, it's right here. And I turn on the app and I open it up, and there's no booking on the front page. And I'm like, hold on a second. It was definitely here. I saw it. And I'm going in and I'm looking, and it's not there. And I'm just like, oh my God, what on earth is going on? I have a wife and 2 kids sitting in the lobby. It's 7 p.m. And the guy is telling me, sorry, sir, we're fully booked. There's absolutely no room whatsoever. And now, so go and apply your resilience in that situation. So frantic search. We basically got back. We went sat in the lobby of this hotel. Both of us, my wife and I, both on our phones, looking for anything. It was a crazy moment because it was around 7 p.m. It's starting to get dark. And of course, on the apps, they recognized this. And so price gouging big time. Went on to Airbnb, nothing, absolutely no. Well, there was actually 1 or 2 things, but the problem with Airbnb is that the host has 24 hours to respond. So it's never a short-term thing. You're not going to kind of get a guy going, yes, sure, you can move in right now. He has 24 hours to respond. So literally sitting there in the lobby, and I'm starting to catastrophize. I'm starting to go, we are going to literally be sleeping in the car tonight if I don't get this sorted. And that is the key aspect of resilience that I want to talk about. And it is, how do you respond when everything goes completely off track? And it's that response is what we're talking about here. That's resilience. Now, so for a few minutes, I was like a deer in the headlight. It's kind of like you're frozen and you're just like, you're staring at the phone and you're going, surely this is a mistake. Surely this is a mistake. And what I was doing there was I was focusing on the problem. I was not focusing on a solution. And like, remember, something to bear in mind is that whenever you're in that panic mode, whenever you're kind of like sitting there staring at your phone, like, what the fuck? What happens is blood is being cut off from vital parts of your brain. It's in the kind of the panic mode. I think the amygdala is the part where you kind of fight or flight or whatever. And that is very good for reacting, but it is not good for being creative and finding a solution. So once I remind myself of this, and like, it doesn't happen instantly, I'm sitting there, I'm suddenly kind of thinking to myself, okay, hold on a second. Let's get back in the right frame of mind here. So there's 3 things to kind of bear in mind when it comes to resilience. Number 1 is emotional regulation. You've got to keep yourself calm, composed, and focused on the solution, not on the problem or the impact the problem is going to have. If you're sitting there going, oh my God, this is going to be a disaster, you're not making any headway into finding a solution. The next thing, number 2, is cognitive flexibility. You must shift your perspective. And if you're going to see a solution, you have to be adaptable. Adaptability is the key. You got to adopt kind of a it could be worse mindset. If you're looking for everything to be perfect, that is not the right perspective to have. You now have to shift your mindset to, well, look, it could be worse. If you're looking for everything to be perfect, you're just going to be disappointed. And then number 3, like, commit to the long game. Resilience is not just about surviving the moment. It's about using that setback as fuel to make you stronger in the future. And so I can look back on all the mistakes that I've made in my career, and like, at the time, disaster. You're really, you're in on the back foot in a big way. But now when I look back at it, all of the stuff that I've done, all the mistakes I've made over the years, they've just made me a stronger, more resilient person. And that's why I'm as strong as I am today. It's because I went through that. If I had had this perfect kind of passage through all these investments and everything went according to plan, you would be a kind of a weaker person, mentally at least. So the perspective that I was in was, I need to find a place for 11 nights. We had booked our flight to and from Tenerife, and we were going to spend 11 nights in this hotel. And so the initial perspective I had was, I need to find 11 nights. And that was the wrong perspective to have. That was the trying to get everything perfect, okay? I was supposed to be moving into this hotel for 11 nights. That was not possible. The next solution was not, let's find 11 nights elsewhere. The next solution was, let's just get a night. Like we don't want to sleep in the car, so let's just get a hotel room for one night. And so we'll figure out the rest tomorrow. So found a hotel, suitably gouged by the guys for one night. I think we paid like nearly €500 for a very mediocre hotel. But we ended up sleeping in a bed rather than in the car. And the next morning, what happens is a lot of these booking apps, they have cut-off dates, and you have to secure the property or you have to release the property by a certain date, or you commit. And as it turns out, the next morning when we woke up, we opened up the app, and sure enough, there was a lot more options. And so suddenly, instead of having the only option was this really, really expensive hotel, like top of the food chain in terms of hotels in Tenerife, thousands and thousands for that hotel. And if we had gone ahead with that, it would have just been financially a complete disaster. Instead, we paid for one night, and the next day, a whole load of options were available. So went and found a place for another 3 days. And you might sort of say, well, that's not great, 3 days. It's better than nothing. It's better than the alternative of having no place to stay. And so this is what I mean by being adaptable. If you're looking for perfection, you're going to be disappointed. And so just figure it out step by step. What's the next feasible step that I can take that solves the problem? And in this case, 10 nights in the next place was not possible. I got 3 nights. And what it did, though, is it actually allowed us to find that the original hotel we wanted to be in was available from the 4th night to the end of the holiday. So we managed to get 7 nights in a really nice hotel, and we managed to rectify the issues, ended up having a really nice holiday. Now, I say that, but just as we're kind of starting to settle in, this is on the 2nd night, we're in this other hotel, and we go down for a meal. It was an all-inclusive kind of a package, and a pretty mediocre hotel, but it had meals and drinks and everything all included. So we go down to this kind of canteen type restaurant that they have, and I just, whatever food I chose to eat did not agree with me that night. And as it turns out, I had food poisoning. And so spent the night throwing up. The whole next day, complete write-off. I'm in bed with a high temperature. My wife's taking care of me. She's trying to take care of the kids as well, trying to enjoy a holiday as well. I mean, it was a bit of a problem, but the following day I had recovered, and it was just in time to check out of the hotel and get into our final stay. And so we ended up with 7 days of bliss. Sure, it could have gone better, but that's if you have the mindset that it should have been perfect. Nothing, if you're going to look for perfection, you're going to be disappointed. Just make do with what you can and try to recover from the situation. And that is effectively resilience. It's how you respond. Now, once again, I'm going to try and link this story back to investment theory and why I think resilience is so important as an investor. Yeah. And before I do, I want to have a quick word from our sponsor. And you know who that is. That's me. I'm the sponsor today because I'm talking about my Property Starter Kit. I mentioned it in the last couple of episodes. It's ready to launch. Those of you who are starting out in the property journey and you'd love to invest in property, you've got some value from this podcast over the last while. and you're interested in joining the accelerator, but the accelerator is probably, you view that maybe as too advanced. And so this is a solution for you. The Property Starter Kit is going to be for those of you. I'm going to teach you how to identify and how to buy a good property. It'll be your first property probably, and it'll just get you on the road, and it'll tell you how to sidestep the mistakes that a lot of people make on their first investment, and how to identify the difference between an investment property and if you're buying it, say, for yourself. Important things to know. Anyway, there'll be a link in the show notes if you want to go and have a look at that, sign up for it. I'm doing a bit of a deal for the first couple of people that sign up, and I'm also giving it away, as I mentioned. I'm going to give one of those to the winner of the contest in Tenerife, and I'm also going to give it to the 3 runners up. So guys, look out on the Instagram for your names to be called out, and I'll be reaching out to you by direct message. Okay, so why is resilience a key trait that you need to develop if you're going to be an investor? Well, it's mainly because, as I've kind of explained, life rarely goes according to plan. Those of you who bought Bitcoin at $100,000 will say, right after Trump got elected, you might now know what I'm talking about, because in the last couple of days, there's been this huge correction in Bitcoin, and it fell 25%, back down to something like 73,000, I think it was. So that's a major drop for anybody, and in the space of a couple of days. And now it has come back up. It's currently at $82,000 a Bitcoin as I'm sitting here. But like, we're still down 20% in less than a week. So that certainly wasn't part of your plan if you're one of those guys. Of course, there's plenty of you out there who bought much lower price. But I'm talking about the people who were caught in the moment, and they're responding, and they're kind of like, oh my God, this is a disaster. Everything that you think is a disaster is never really as bad as you think it is. The worst case scenario would be somebody's dead, and it's a long way from that. All it is it's a blip in your otherwise long career as an investor, if that's what you plan to be. So rather than focus on the problem, just think about the lesson. Yes, markets can correct very suddenly. I can get caught. I could lose 20%. Maybe I shouldn't have bought it all at one time. I'll learn that lesson and I'll bring it with me for the next time. But it is naive to think that your investments will always go exactly according to your plan. And if you go in there, if you put every penny of your resources into one single deal, and I know some of you, that may be the only way that you can get on the property ladder and get your first property, but don't be naive to think that it's going to always go exactly according to plan. Now, you can take steps to reduce the risk that it'll go wrong, but life can deal us all sorts of cards. And as I mentioned in one of my podcasts in the past, I talked about the 4 E's, and the economy and events. Those are 2 things that just can catch you. Nothing to do with anything you've done wrong. It's just the timing happens to be wrong. And that is where I want to get to on the first point here today. Is the truth is that 80% of millionaires have experienced significant losses and financial setbacks in their career as an investor. Whether it's bankruptcy, whether it's failed deals, whether it's just economic downturns. And a great example of this is Ray Dalio. Ray Dalio, to those of you, I'm sure most of you will have heard of him, and he's the author of a book called Principles. But Ray founded Bridgewater Associates in 1975. Today, it is one of the largest hedge funds in the world. It currently manages $112 billion. That's the size of it. And it employs 1,500 staff. So Ray founded Bridgewater back in 1975. And 7 years into becoming a big hedge fund, 1982, Ray had this idea that the market was going to go one direction. And so he made all of his investment bets on that one direction. Turned out he was wrong. And in 1982, he was caught very badly by this mistake that he made in the direction. And when his prediction turned out to be wrong, he lost everything. He ended up penniless from this, okay? His entire firm had to fire every single member of staff, and the business was really just reduced to nothing. And You can imagine how humbling it is for a guy that thinks he's kind of like the big cheese with 1,500 employees. He had to go and borrow $4,000 from his dad just to cover the rent and to kind of keep going. And so in that moment, he learned how to be humble, first of all. But humility is a big lesson. You've got to remember. Also, decision making. Like if you bet the ranch, or if you go all in, as we say, you can be humbled in a big way. And I learned that with my investments in the past. I've mentioned them many times, so I'm not going to go over about it. But remember to stress test your investment ideas. Now, rather than let that experience kill off his dream, you can kind of think, God, I'll never be a big hedge fund owner again. Like I've just lost everything. Instead of letting that be that moment for him, he instead turned it into the defining moment of his career. And he ended up developing this principle-based decision-making system, which has helped him make the firm into the colossus that it is today. It is one of the largest hedge funds in the world, and it came from that experience in 1982. Next thing I want to tell you about is resilient investors don't try to predict the market. That's what he was doing, trying to predict the market. What they do instead is they adapt to market conditions. Now, I see it in my direct messages and the various emails and messages that I get all the time. People will say, Gavin, I plan to invest just as soon as there's a bit of a downturn or a bit of a crash, and then I'll get in. In other words, what you're trying to do there is time the market. And like each to their own, decide on whichever way you want to go about it. But timing the market is usually not as good of a strategy as time spent in the market. So time in the market versus timing the market. And so rather than focus on trying to get it exactly right, just focus on the strategy and being adaptable so that your strategy shifts to accommodate a change in conditions. A good example of that is Warren Buffett. If you go back to 2008, the big financial crash that we had, the one that I know all about, everyone was piling out of the banks. The banks were effectively radioactive at the time. And when everyone was getting out of Goldman Sachs, he decided to give them a lifeline, and he invested $5 billion in Goldman Sachs when everyone else was pulling their money out. What was the result? He made billions on that single investment. And the best investors don't fear the market. They just adapt to the market condition that they're in. There are 5 stages of resilience, and it's important that you recognize them because this is how you kind of can respond and recover. The first stage is shock and denial. And I mentioned when I'm standing in the hotel lobby and the guy says there's no booking, shock and denial. I'm like, no, you've made a mistake. Have a look at my phone here. And then you're looking at the phone and you're in denial. And that's exactly when the market drops as well. When the market crashes, when you suddenly realize you made some mistake, something's gone wrong, you're in denial and you're in shock and you're just staring there, unable to do anything. After that, you go to phase 2. Phase 2 is anger and blame. And anger is like, how can I be in this position? Who can I blame for this? And usually you're looking around at somebody else to blame. There's the hotel manager staring at me. I'm angry and I want to go and blame him. Like, you're at fault here. Bottom line is, it was my fault. I had received an email. It was lost in my Gmail inbox, and I didn't see that they had actually cancelled the booking. I had been notified a week before that the booking had been cancelled, but just because Gmail is like this jumble of emails, I didn't see it. So entirely my fault, but I wanted to blame somebody else. And so you got to be careful not to go and blame anybody external for the mistakes that you've made. And it's easy when you go and buy something, you'll be there thinking, who told me about this tip to buy these shares? Who told me that this was a good area to invest in? You are the person who did it. Just accept the blame. And once that's the next stage, acceptance, and then learn. Reflect on the lesson rather than figuring out, who's to blame and all that kind of stuff. Just accept it. You're in this situation. What's the lesson I can learn from the situation? Easier said than done, but that is what resilience is all about. It's how you respond to the situation. And then there is what's known as strategic adjustment. And that is just where you realize you've learned from your mistake and you're now making these little tweaks to your investment strategy. And you're saying next time, and you're modifying your strategy. You're thinking to yourself, all right, the approach I'm going to take in future, I'm going to make sure that I do this instead of that. And whether that's diversify, have it yourself spread across different asset classes, or maybe you just use a better risk analysis. Just don't assume that everything is going to go exactly according to plan. And then the next thing to remember on this 5 stages of resilience is to rebuild and to grow. And this is where, after you've adjusted your modified your strategy or whatever, it's down to confidence. You start to regain your confidence. You start to realize, you know what? Yes, that was a horrible experience, but I've regained my confidence because I feel like I'm a wiser, more attuned kind of person. I'm in tune with the market more than I was prior to this moment. And you build back stronger, and you come back from this setback in a much stronger way. And so try to recognize these 5 steps, especially the first 2, shock and denial, anger and blame. Those are the 2 that you need to recognize quickly, because if you can get beyond them and move to the acceptance and learning, then you're recovering much quicker and you just get straight back into building back. Now, resilience is more important than intelligence when it comes to investing. This is an interesting one because a lot of people might think that sounds like baloney, but a study from the University of California, they found that there was no correlation between people with high IQs and long-term investment success. But what they did find was that people that had high emotional resilience, they fared much better in the long term as investors. So emotional resilience is the key here. Make sure that you have that emotional resilience. And then the 5th thing I just want to talk about is the rule of 10 crashes. Now, every investor will face multiple losses, and big losses in some cases. And if you're an investor, you are most likely over your entire career, and don't forget, if you're listening to this and you're only at the start of your career, then you've got many more to come. But I've experienced multiple crashes and losses, and I know that there will be more in the future, but I'm certainly more resilient now than I was when I started out. But they reckon the average investor is going to experience at least 10 of these in their career. And the difference between a resilient and a non-resilient investor is that the resilient investor sees this as inevitable. You are never going to sidestep a crash or a loss. You will probably reduce the number that you actually experience because you're more resilient and you're wiser as you go on. But to think that you're always going to get it right is so naive and misguided that you may as well just forget about being an investor if that's what you actually think is possible. It is part of the game. Losses and crashes and downturns, they are just part of the game. If you're not willing to accept that, then you shouldn't be in there, because you're living in a kind of I suppose, like cloud cuckoo land, we'll say. So everyone, just factor it into your investment philosophy. It's going to happen. Hopefully not, but it is going to happen. And therefore, everyone, if you basically go into each investment knowing that it's possible that this one will be a loss maker, it's possible that there will be a crash in the near future, then you might just prepare yourself a little bit better so that you actually have something there to recover. For example, the 2000 and 2001 dot-com crash, all of the big tech companies, like they weren't big at the time, they were small companies, Amazon, Apple, all of these companies, you could pick them up for pennies on the pound. And today, trillion-dollar companies. The 2008 financial crash, same thing. A lot of companies were very, very low price. And if you had some resources sitting there, if you had kept back a little bit of money from the market, you'd be in perfect condition, or you'd be in perfect position to go and take advantage of it. 2019, COVID. There was a lot of opportunity in the time of COVID, but most people were fully invested in the market. Many investors quit after their first major loss. So hang on in there. Wait for the recovery. Of course, in order to do that, you do need to have those bits of reserves. So if you want to stay as an investor long term, you need to keep back some cash. Like if you feel like every time you have a bit of cash in your hand that you need to go and spend it, then you're not going to have anything in reserve when there is some sort of a downturn. And so, guys, the key takeaways from today's episode. Number one, everyone is going to or has experienced losses. It's simply how you respond that matters. It really doesn't. It's not up for debate whether or not you will lose at some stage in your career. You will, and so it's how you respond to that loss. That's the thing. Number two, mental strength. That is essentially resilience, emotional intelligence, and emotional resilience. Your emotional resilience will outwit or will beat your intelligence in the investment game, without a doubt. And so try to remember that. It doesn't matter how smart you are. It doesn't matter how many books you've read. You have to be strong and expect the unexpected. If a deal goes bad, it's part of the game. And you should have expected that. And therefore, you should have some reserves put aside just in case. Because normally whenever there's a downturn, it's a buying opportunity. So if you've got yourself in a position where you can actually take advantage of it, you might actually come out the winner. Market crashes and losses, just inevitable. Part of the game, factor it in. Especially in real estate, rewards tend to go to those people who hold on, as opposed to trying to get out of the market. So if you sit through a downturn, if you hold on to the property and just, batten down the hatches, as they say, you will come out the other end far better. But if you're a person that, oh my God, there's a downturn, I must sell, you'll sell it at a loss and you'll never get back into the market. That's what happens to most people. And 5, most new investors quit after the first major loss. So don't be amongst one of those statistics. Hang on in there. Be the guy that's emotionally strong, that can actually tolerate it, painful as it is. Dust yourself down and say, you know what? I'm an investor. This is part of the game, and therefore I'm ready. And just figure out a way to kind of keep going. Hold on as long as you can and keep going. So guys, I hope you found this one useful. I will see you in the next one. So guys, I hope you enjoyed today's episode. Once again, if you are thinking that you would like to invest in property but don't know where to begin, you feel you're one of those beginners, I have you covered. My new property starter pack is now launched, and it's designed specifically for beginners. No jargon, no overwhelm, just a step-by-step plan on how to buy your first property with confidence. Here's the kicker. I'm going to give the first 100 people who register an exclusive early bird discount. And so hit the link below to secure your spot now. See you inside. Thank you for tuning in to another episode of Behind the Facade. If you enjoyed the show or found it useful in any way, could I please ask you to take a moment to leave a review over on iTunes or Spotify or wherever you listen to podcasts. There is no algorithm for the podcast. And so the only way we can get other people to find out about it is when it's shared by you. So if you can do that, it'd be great. If you have any questions or topics you'd like me to cover on future episodes, please connect with me via the school community or just send me a message on Instagram or wherever. You'll see the links in the show notes below. You can stay up to date with all of my content and the projects that I'm working on by signing up for my weekly newsletter, and you'll find a link below in the show notes for that too. That's all for now, guys. I'll see you back here same time next week.